We should discuss the cost chops in Tesla down another 4%. As you're taking note of in your notes to us down around 19-20% year to date. They're standing out here and they got a smidgen of space to run, considering how long they can keep this up. No doubt. I mean, they're in an extraordinary position, right? Since they have thoughtful, sort of have the best expense structure, right? They don't publicize, you don't have showroom. So I think they can reduce costs more than parcel of a ton of their rivals. They're additionally clearly prior to EVS than others. So it's an extraordinary approach to truly take piece of the pie, I think. And eventually they likewise have a ton of things that sort of go in support of themselves. They're the greatest recipients of the IRA tax breaks this year. And furthermore, two of their plants, Berlin and Austin, are truly sloping up. And those will diminish expenses over the long haul, indeed. I mean, it seems to be a major title, right? Cutting, evaluating by like 20% for a portion of the models. It sounds pretty sensational. Yet when you truly take a gander at how they can bring down costs, it's actually an incredible way for them to acquire portion of the overall industry. There will be some close-term strain on productivity, no question. Except for I think the market truly comprehends this, and you're seeing the stock response. It was down more today processing this news, and presently it's truly returned. So I think the market is truly processed a ton of these cost cuts. So that is intriguing then their time, I suppose, because actually the pattern has been that Tesla has been losing its piece of the pie. Yet you imagine that these cost slices are truly going to switch that. Um, Understanding that, no doubt, I mean, losing portion of the overall industry is somewhat, it's sort of something unjustifiable in light of the fact that there's new entry coming in that didn't exist before, right? So clearly they will lose portion of the overall industry. Yet that has fallen off of such a big number where they were one of a kind. However, it is a rising tide lifts all boats. Tesla needs other EV creators because the greatest contender, Tesla is truly non-EVs. I believe that could be difficult for them. So I'm calling from the low finish of their direction reach, and afterward I do a portion of the parts valuation, and I emerge to a $12 per share valuation. It is not necessarily the case that the master business they have is astounding. It's one of the most outstanding organizations in cars. It's that Aviv drag is super excruciating for these right now battery electric, unadulterated battery. Electric vehicles are the most costly collectively available, close to $50,000 on normal. When you step into module crossovers or mixture vehicles, golly, those can begin with a Prius in the high 20s, and you're getting huge gas mileage. So there's a hole, think in basic terms. Unadulterated, battery, electrics are phenomenal. Fun. Vehicles like your Teslas, yet they're costly, and you want charging the module, mixtures in the half and halves. Your reach anxiety disappears on the grounds that you have the motor to influence the vehicles. These experts just raise financial backers' fears. With their most recent remarks, recall that exhilarating inclination when EVS burst onto the scene. All the buzz about saving the planet compressing around quietly and leaving service stations in the residue. Well, these may very well be a cycle of an era of late. The EV market appears as though it's hit a pothole. New businesses are collapsing quicker than a paper plane in a typhoon, and laid out players are feeling the tension. Even enormous examiners like Kathy Wood are areas of strength for sounding of caution. GM and Passage have said, we're venturing back. We won't do this until it's productive. The issue with that is to be beneficial. They need to scale. That is the way this works. These are expectations to learn and adapt that they are writing down, and those are communicated in cost. The EV dream could be transforming into a horrible deciding by the new offer of the market. And how organizations could maybe tapping out. We dread greater burdens are on the way for the EV market, and it's best to secure your safety belts. It's no new news then that the underlying EV blast is, by all accounts, chilling off. Subsidizing Forev, new companies has dunked in some high-profile players like Faraday Future and Lordstown Engines, have tapped out even industry monsters like Jam and Portage are confronting difficulties. And a portion of these organizations have needed to eliminate their EV creation gauges. Today, we will uncover the genuine reality of this entire EV adventure and purposes behind the rehashed aftermaths, and which organizations can endure these difficult situations. So, stand by listening to this new meeting. Michael, how about we discuss battery electric EV since I spell almost certain doom for the day that progress is occurring, regardless of whether the speed of the change is easing back. Such a large amount, the fight between the US players, especially, and the Chinese players, have been going on in China, the world's biggest EV market. Something grabbed my attention before this year when you put out an expectation that recommended that battle will move over to North America. Converse with me about the thing you're seeing there and how lengthy until an organization like BID, for instance, you think truly obtains entrance into the US at a lot less expensive price tag. You're precisely on the thing we're seeing inside China, is that as the economy eases back, they have monstrous overlimit, up to 10 million units of overcapacity. So all automakers in China are currently focusing on worldwide business sectors, pushing out to any place they can sell their vehicles beyond China. Last year, China outperformed Japan as the main exporter of vehicles universally. And they're simply getting everything rolling. Organizations like BID and others most certainly have their sights set on Europe, where they're now moving in and on the US. Now, here in the US, there's this thing called a 27.5% import obligation that has truly slowed down the Chinese development. With regards to the American market, yet doubtlessly the Chinese automakers need admittance to Europe, US, and other worldwide business sectors. Building EVs isn't modest, and battery tech, an essential part, is costly. And store network issues aren't actually helping either. This single component pushes up creation expenses and makes it harder for new companies to contend, and it powers laid out players to raise up costs. I mean, who needs to dish out for a little fortune while they're purchasing an electric vehicle or an IC vehicle in these dubious monetary times? No less, presumably not. So many hello folks invite back to Tesla tomorrow. Recollect when Tesla was the solitary officer in the EV Wild West. Not any longer, heritage car creators like GM Passage and Toyota are currently serious players, offering their own convincing EV choices. This expanded rivalry comes down on new companies, and it powers laid out players to continually enhance and adjust. It's a long, extreme game, and not every person can keep up yet. That is not even the main problem of late. These contenders are finding it hard to get by. For example, Passage has recently declared it will cut plane creation of everything electric F-150. Lightning pickup truck generally in around 50% of this current year, denoting a significant inversion for the automaker critical expanded PL limit. With regards to the EV in 2023, the automaker had recently removed its arrangements for a FY results conjecture because of vulnerability over the forthcoming endorsement of its arrangement with the UAW Association, and cautioned of proceeded with pressures on electric vehicles. The single maneuver here sent portions of 4 down almost 4%, and it flagged a hardening market for electric vehicles. What truly is the fate of EVs and the market? How about we find out yet before we do? Assuming that you like this kind of satisfied hit that like button buy in and turn on present notices on push state of the art on everything along on with Tesla. Very much like Portage GM reported in October that it was leaving its objective of building 400,000 EV from 2022 through to mid-2024 and has deferred creation of electric pickup trucks at its plant in Michigan's Orion municipality by a year, and that is not all. GM likewise went further to scratching a $5 billion plan to mutually creating reasonable EVs with Honda engine. So will more EV creators drop out? Well, most likely the market will probably see combination with very much subsidized areas of strength for players, headways, and laid out brands facing the hardship in its